Welcome back to the channel. This is Matt Garland, NMLS number 58700, but better known as MG the Mortgage Guy. We are alive. We are blessed. Thank God for another day. All right, so make sure you guys like, comment, share, subscribe to the channel. Hit the bell for notifications. New videos every day, 4 p.m. Eastern Standard Time. And make sure you download us on wherever you listen to podcasts, audio, Spotify, Apple, MG the Mortgage Guy Show. Also, don't forget, do remember, go to mgbookstore.com today. Pick up House Hackonomics, the Real Estate Investors Manifesto, and everything else we got to offer over there at mgbookstore.com. All right, so interest rates have dropped to 3-month lows. And this past Tuesday, we put out a video. The name of the video, Tooks will pin it up here, right? I think it was great news for interest rates. Because the inflation data came out, and in that video, I told you guys, but the inflation report coming back that it's lower, from 7.7 to 7.1%. That was great news for interest rates. And at that time, mortgage rates were around 6.375%. Now, over the past couple of days, today is Saturday. We're releasing this mortgage market update. So that way you guys go into the weekend knowing exactly where the market is, and you can kind of, see the trends. So right now, mortgage rates have dropped. First of all, you guys always ask me how to keep up and how to track mortgage rates. So I'm going to show you a website that I go to pretty much daily for information. It's a very, very credible website. I use it all the time. If you follow me for the past couple years, I always talk about this website. So we're going to go to it right now. It's called mortgagenewsdaily.com. mortgagenewsdaily.com. So right here, we're on the website, and we're going to show you what today's rates are as of December 16th, 2022. Now, here's my disclaimer. Here's the MG disclaimer, ladies and gentlemen. These rates are subject to change. I am not qualifying you for an interest rate, or am I giving you a commitment to lend, okay? When the market is open back up on Monday, these rates can change. So while you're watching this video over the weekend, please keep that in mind. Interest rates, mortgage rates change every 32 seconds when the stock market and bond market is open. Obviously, it's the weekend is closed, so it's going to be flat right now. But come Monday morning, these rates are subject to change to go higher or lower. All right? So if you look at this chart, it shows you the 30-year fix. Now, when they're surveying this is the survey. They're surveying lenders, and they're taking an aggregate of all the lenders that respond to the survey of what their rates are. Typically, when you see rates posted online, it's for single-family properties, 30-year fixed mortgages with 20% down payment and a 740 credit score, okay? Now, if you have lower credit scores and a lower down payment, obviously your rates can be different from what you're seeing on the survey. So I just want to give you guys clarification, because a lot of people think, well, I got a 620 score, but the rates for 30 years said it was 6.1. No, you don't qualify for that, all right? This is typically A paper. If you are considered what lenders call A paper, your interest rate should be in this range, give or take. Now, 30-year fix as a 616, 6.17%. So basically about 6 1/8, 6.125%, which over the past couple of days has been up and down. It was actually a little bit lower than this on Thursday, and then it creeped a little bit back up on Friday, but still we're getting closer to that 6% mark like I told you guys, and we possibly can be under 6% by the end of the year, so we're going to keep a track on that. The 15-year fix is around 5.5%. 30-year jumbo is around 5.5%. Now, in a jumbo, typically is a loan that's over the conforming loan limits that Fannie Mae and Freddie Mac will not buy from a lender. Those are more portfolio rates. I can tell you this: if you're buying, let's just say $1 million, $2 million home, and you're a paper full documentation borrower, you can probably get lower than 5.5 if you go into a big bank right now, right? Big retail bank. 5 1/8, 5/1 ARM is around 5.875%. But again, jumbo, you can probably be high fours, mid fours on an ARM right now from a retail big lender. All right. 30-year fix for FHA around 5.73. Now that can be a little bit lower too, just depending on the lender you go with. You can probably be in the mid fives, more like 5.3 to 5.5, somewhere around there, just depending on the lender that you're working with. And the 30-year VA is pretty much the same as FHA, but again, like I said, depending on the lender you're working with, you can probably get a quarter on these FHA and VA rates. You guys can probably get about 0.25% to 3/8 of a point lower than what you're seeing here on this chart right here. But overall, this is great news. Although we see reds on the change, because that's, again, from Thursday to Friday, it was a slight uptick in the rates. But overall, we are going down, and we are at 3 months lows right now, which, again, we've been at 7.25%, 7.5% for A1, A paper credit just 3 months ago, 2 months ago. Hell, when that CPI report came out in November and it went from 8.2 to 7.7, that's when we started seeing that trajectory for mortgage rates go down. So this is a home run. And from what everyone is speculating on the next CPI report that's going to be released in 2023, we should see that percentage fall from 7.1 to somewhere in that mid sixes. So that CPI data is extremely important to these mortgage rates, and it's going to keep that 10-year treasury, which you guys see on that bottom right-hand side, although it's ticked up 0.25% on Friday. Once you see that 10-year treasury going below 104 and lower, that's home run for us. That's going to bring us into the high fives on a conventional 30-year mortgage. So I'm not going to get into 10-year treasuries or MBSs or anything like that in this video. That's a little bit of a high-level conversation. Maybe we'll do a video on that at another time. But I just wanted to give you guys the outlook for mortgage rates going into this weekend while you guys are out there shopping. And again, this is for primary residences. Now, for investment properties, for conventional or even asset-based DSCR loans, you can probably be around 8%, mid 7s to 9% right now in that marketplace. So it's a great time for you guys to go out there, make smart offers. Don't be I would say make a disrespectful offer, but hell, closed mouth don't get fed. I was going to say don't be too disrespectful, but whatever floats your boat. Be disrespectful, put out the offers, go out there, analyze some properties, go out there and buy real estate. Just go out there and be smart about it. And this is your mortgage market update. Maybe we'll start doing this more on a weekly basis, let you guys know where the mortgage rates are. If that's something you're interested in, comment in the comments, right? Let us know if you want to see more mortgage rate weekly updates. All right. So that's all I got for y'all. Matt Garland here, NMLS number 58700, but better known as MG the Mortgage Guy. Peace.